So now we have all the results, and the best DCA is without any doubt the DCA. ETFs have become one of the most popular ways for young investors to invest in the stock market. And we often hear that DCA, dollar cost averaging, is one of the most powerful ways to invest long-term, especially in a market that can be volatile like the stock market. But there is one question many investors ask themselves: how frequently should I do my DCA? Is it better to invest every day, every week, every month, or even every quarter? Or in the end, does it make no difference at all? To answer this question, I decided to run a very simple test. I took the price data over the last 20 years on the iShares World ETF, and I simulated 4 different investment strategies: a daily DCA where I invest a small amount of money every day, a weekly DCA where I invest a larger amount of money once a week, a monthly DCA where I invest an even larger amount of money every month, and finally even a quarterly DCA to see how far we can push things. In the end, the total amount invested is the same for every strategy over the same time period on the same asset, the World ETF. The only thing that changes is the frequency of the investment. And I even added a bonus experiment to see if we could beat the dollar cost averaging, but more about this at the end of the video. So, is DCA as reliable as people say, no matter the frequency? Well, we're about to find out. But first, let's establish some basics. First of all, what exactly is DCA and why is it so popular? DCA stands for dollar cost averaging. It's one of the simplest, yet most powerful investment strategies out there. The idea is super basic. Instead of investing a large amount of money all at once, which is called a lump sum, you invest a fixed amount regularly. For example, every day, every 2 weeks, or every month, regardless of the asset's price. You don't try to guess the right time to invest. You just stick to a consistent plan. This sort of automatic approach helps reduce stress and has a magical benefit. It smooths out your average entry price over time. Sometimes you'll buy when the asset is expensive, sometimes you'll buy when it's cheap, but over time, it will balance out. DCA is especially popular in markets that can have swings and be a bit volatile, like the stock market. So instead of trying to predict these swings, DCA lets you enter gradually over time. It's also an extremely accessible strategy. No need to be an expert, no need to stare at charts or spend hours analyzing things. Just set a budget, choose a frequency, and stick to it. And historically, it's been shown by academic research that it's one of the most profitable investment strategies. But is it possible to optimize your dollar cost averaging? Does changing the investment frequency affect your final returns? Is investing every day more efficient than investing once a month? Let's test it with real data and a clear methodology. And by the way, let me know in the comments section which frequency you think is the better one. I'm pretty sure you won't be able to guess which one performs best. Oh, and also, 80% of you who are watching us aren't subscribed to the channel yet. So I'll give you a few seconds to fix that. Okay, so for our test, I kept things simple, transparent, and comparable. We'll invest the same capital over the same time period and use the same transaction fees. We want to see if investing more or less frequently affects the final performance. So here are the 4 investment scenarios that we will try today. The daily DCA with 10 euros per day, the weekly DCA with 50 euros invested every week, the monthly DCA with 220 euros per month, and finally the quarterly DCA with 660 euros invested every 3 months. I'll use the opposite platform to run these tests. The World ETF we will use today is going to be the IWRD, which is the iShares World, issued by BlackRock and quoted in euros. So let's select it, and I'll enable the transaction fees so that we pay 0.25% of the amount we invest, no matter the frequency. And here I'll just type the prompt of the strategy, the rules of the strategy we want to test. So let's start with the daily DCA. I'll just say invest 10 euros every day at noon. And let's say we want to do it during lunch break or something, and every day we want to invest 10 euros in this World ETF. We'll backtest that over the last 20 years, as you can see. So that's it. The strategy is as simple as that. I'll click the backtest button and we'll see the results. So as usual, the backtest is running, and this will take between 30 seconds up to 1 minute. All right, the backtest is finished. Let's see what we got. Okay, so here are the results for the daily dollar cost averaging. over the last 20 years on the iShares world. So the total performance, as you can see, is 153% with an annualized return of 4.88%. Now, this total performance and this annualized return might be different from the World ETF you use, because it might be currency hedged or the TER might be different. It's all different depending on the ETF. But for this World ETF in general, for today's test, these will be our points of references. So 153% total performance and annual return of roughly 4.9%. So let's now move on to the weekly DCA and see if it does better, worse, or same as this. So for that, I'll just hit the copy button right here. We'll keep the same ETF. I'll just change the prompt and instead write invest 50 euros every week. Since the ETF is only quoted on from Monday to Friday, it doesn't trade on weekends. That's why we will invest 50 euros, not 70. I'll click analyze. Strategy should be good to go. I'll hit backtest, and now let's wait for the results. And while it's backtesting, let me know in the comment section what frequency you currently use, no matter if it's the World ETF or the S&P 500, but what frequency do you use on your investments? Okay, so here are the results for the weekly DCA now, and you can see the total performance is basically the same, with the annualized return making no difference whatsoever compared to the daily DCA. So there is no benefit whatsoever investing every day as opposed to investing every week. So if you were investing a little bit every day, well, you can chill a bit and only do it once a week, unless the monthly DCA is actually better. Let's find out. So same thing again, I copied the strategies and I just changed the rules. I wrote invest 220 euros every month. So let's start the backtest. 3, 2, 1, go. And here are the results for the monthly dollar cost averaging. And it's insane to see that we get almost very precisely the same results. The total performance is also 153% with an annualized return of 4.88. The minor difference is just like in the digits after the dot. That's really crazy, because no matter if we did 234 transactions, like here on the monthly DCA, and I believe for the weekly it was like 1,000 something and 6,000 something for the daily DCA. And no matter how frequently we invest, as long as it's moved out over long enough period of time, at least between the daily, weekly, and monthly DCA, this makes no relevant difference whatsoever. So if you were stressing out about wanting to invest every single day or every single week, well, you know now that you don't need to worry pretty much about this, because investing just once a month gets the same performance as investing every day or every week. I'll just now try the quarterly DCA and we'll see if there is any difference, but I wouldn't be surprised if there isn't any. So the rules will change from investing 220 per month to investing 660 every quarter. Simple as that. Let's start the backtest and let's see what we get. If this is the type of experiment that you like or the type of information that you're looking for, make sure you subscribe to our newsletter. You'll find the link in the description below, because this is exactly the type of findings that we share with you. All right, so what's the verdict for the quarterly DCA? Let's see. And once again, it's the same. 153, almost 154 in that case in the total performance, and the annualized return is like almost the same. It was 4.88 for the other ones. Here we get 4.90, but that's a very, very negligible difference. Okay, so what is our conclusion on this? The frequency of DCA has no meaningful impact over the long term. Why? Because volatility neutralizes itself over time. Now here, as a reminder, the transaction fees are percentage based. So no matter if we invested once a month or every day, but in the end, the total amount is the same. So we pay the same in fees. But if we had transaction fees that are fixed in terms of dollars or euros, then in that case, the daily dollar cost averaging would get crushed. And the more often we would invest, the more the performance would suffer because we would pay more fees. But if the fees are percentage based and are basically the same, no matter the frequency, then, well, some days daily DCA will win, some other time the monthly DCA will catch a perfect dip, But over the years, all these will even out because you're exposed to the same cycles, the bull cycles, bear cycles, phases of horizontal consolidation. So all of this will actually neutralize the different entry points you got. And by neutralize, I mean it will really smooth them out. Now, at the beginning of this video, I told you about a bonus experiment that I would like to do to see if we can beat dollar cost averaging. So here is the logic of the strategy that I want to try. Instead of investing every month, no matter what, I want to set aside the amount that I would normally invest if I use DCA. I want to set it aside and invest all of it if a certain condition happens on the chart. For example, if I see that the price of the ETF world has dipped quite a lot, which would be potentially a good moment to buy. So I'll just prompt these rules. I'll just say set aside 220 euros every month, and when the RSI on a daily chart dips below 30, which means that the World ETF in that case is in an oversold condition, then I want to buy. So when the RSI on a daily chart dips below 30, I'll say invest all the cash you have set aside. And we'll keep doing this logic, so keep going with this logic over time. Okay, so I'm really curious to see if thinking like this and having such a strategy, because here there is a certain notion of market timing that is enforced, because we wait for the price to dip low enough so that the RSI is in an oversold condition. I'm really curious to see if this does better than the DCA. Let's see. Okay, here are the results. I call this strategy save then unload all. It speaks to itself. And surprisingly, as you can see, it does not do better than monthly DCA, because we get a total performance of 143% with an annualized return of 4.67%, which is below the 4.88% that we got with the monthly DCA, for example. So wanting to set money aside until the perfect market condition occurs to then invest it all at once, it does not do better than just blindly investing every month. And this actually confirms what the academic research on dollar cost averaging showed, that market timing does not beat passive investing regardless of the price. So the stats clearly show that waiting for the perfect dip does not beat DCA. As a conclusion, what does this mean for you? Well, first of all, if you want to invest in an ETF, do not overthink it. You don't need to stress about daily versus weekly versus monthly versus quarterly. Pick the frequency that works best for you. If you love following the market every single day, well then go with the daily investing, for example. But make sure that you do not pay more fees than if you were investing every month. If you prefer simplicity and you don't want to bother yourself too much with that, then go monthly or quarterly. Just basically adapt your DCA to your reality, your budget, your schedule, your platform, etc. In fact, the key to DCA isn't the frequency, it's the consistency. The hardest part is sticking to it, even when the market goes crazy. Let me know in the comment section if this video will make you change your DCA frequency. And if you liked it, make sure you hit that like button and subscribe to the channel. As for me, I'll see you in the next one. Bye.